welcome everybody, and happy Friday. Welcome to the Real Life Real Estate Investing Show, your guide to generational wealth. My name is Hector Hernandez. I'm a real estate fund manager as well as real estate and wealth building coach right here on reallifetrading.com. As always, joining me today, my buddy, my co-host, and my pal, Luis Alejandro Lopez. And today we got a very, very special show for you all today with the real estate hustler himself, Mr. Josh Appleman. Luis, kick it away. What do we got? Tell us about the agenda.
Good afternoon, good morning, good evening, wherever you're listening to us. We have a guy here that he's done it all. Basically, he started doing single family, then he jumped to multifamily, then he's doing self-storage. He's putting his hands and his eyes on everything. So we brought him here so he can give you his perspective of why things work, why he's pivoting one way, why is he going the other way, and why he's going, basically staying in front of the curve. So let's see.
You forgot male model. Before we go too far, Lou, let's run through the disclosure and some updates that we have for everyone out there on the YouTube land, please.
Disclaimer, everybody. We are two guys on the internet. All right. We're two guys on YouTube. We've done a few things on real estate and we're sharing with you what has worked with us, for us. So please, before you do anything, before you buy a house, clicking, and then all of a sudden you bought something, before you sign a dotted line, before you ask for money, before you get yourself in debt, make sure that you know what you're doing. If you don't know what you're doing, ask us, ask somebody. You can reach out to us. We're always here. We're on reallifetrading.com/RE. And you're going to have all our information at the bottom, at the very end. We're going to share our emails, everywhere you can find us. We just ask questions. If it's not us, please ask questions to somebody that might know. Josh shares as well, and we'll share also his contact information. This presentation is to be educational and entertainment, and hopefully you get something out of this and you start making really, really, really good money with it. Okay. So
that's the dream and the goal.
My brother here is doing real estate for our heroes. He's doing a free mentorship 8 weeks, okay, for heroes. And who are those heroes?
Active and retired military personnel. So this one right now, we're about halfway done with it. But we will be doing another one. I don't have exact dates yet, but there is a waiting list that the awesome Emily created. If you guys want to hit up the waiting list and jump on that, go ahead and scan that QR code. We've upgraded our technology. We got QR codes now. We're going big places, Lou. But we wanted to make it easy for you guys to register and sign up, whether you're active military or retired military personnel. I want to donate this mentorship to you 100% for free. This is the same standard mentorship that I in the past have charged money for. And in this case, we are giving it away because I am just grateful for you guys allowing me to be free, to live in this beautiful land, in this beautiful country, and to have been able to generate the wealth that I've generated only because of these brave men and women that go out there and keep us the country that we are and provide us our safety and our freedom.
That's awesome. That's awesome. You know what? I should sign up for the same thing. Give me when you got a date. I'll do another one.
All right. I will come up with a date probably by the next time we meet. I still got to check my schedule.
You'll do the daytimes, I'll do the night times.
There you go. Perfect.
All right. So what else?
What else? So everybody's been asking, hey, where do I meet investors? Where do I meet syndicators? What do I learn about real estate besides learning from you guys? How do I go big? Well, I am going to this event right here. I have partnered up with my friend David Lindahl, and I'm going to be going to Ultimate Partner, and this is a RE Mentor event. This is hosted by the one and only, the legend, the myth, David Lindahl himself. He wrote the book Multifamily Millions. And so he did something cool. He went ahead and created a promo code for us here for everybody in the network. If you go there, you can get an extra $200 off. I believe it's down to $790 right now with this promo code, if I'm not mistaken, which is a great deal. Eventually, it will go up in price. It will be well over $1,000. I will be there myself. This is September 8th through the 10th, so we got plenty of time. get that early bird done, get your flights, get your hotel. Go ahead and scan this QR code so that you can get your tickets, and make sure you use promo code Hernandez to get the discount. That will get you all in the room with a bunch of really cool, smart, savvy real estate investors. You can grow your network. And we often say that your net worth is your network. So make sure you're out there, make sure you're meeting people, you're learning. There's going to be a great educational event. It's just a good event to learn, to grow, and to grow your network and your net worth all at the same time. Come join me.
Sweet. All right, actually, I should take that one. Now, next one. What do you have now? Who's that?
There, look at this guy, male model
yeah.
himself. Mr. Josh Appleman. Welcome, sir. Welcome to the show. We are so humbled and so grateful for you to join us today. I've had the opportunity to be in the same mastermind with Josh for well over a year now. So we've gotten to hang out week after week for a while. I've gotten to know him, some of his investments. I've had the opportunity to be a guest on his podcast, the Real Estate Hustlers, which I think you have somewhere on here, Luke.
Yes.
And Josh is just an all-around good guy, super smart and super experienced in real estate. So we wanted to bring him in to share some of his skills, his knowledge, and get you all on your way. Josh, enough about me talking about you. Tell us a little bit about you. What's your background? What landed you here?
Yeah, for sure. And I can ramble, so just cut me off if I ramble too much. But my journey certainly did not start with real estate. It was far from it. In 2010, I started a flooring installation company. So very, very far from real estate. Flooring installation company started with 2 crews. 2 crews turned into 3, 4, 5. And it was business to business. So transactional flooring installations, business to business, meaning the Jerry's flooring store down the road, we would install their flooring for their customers. So created a flooring installation company, started doing a lot of work for lumber liquidators, a lot of work for Lowe's, implemented I'm fast forwarding here, implemented a CRM to manage the customer base, to make sure that the customer service was intact, surveys after the installation, just making sure the business was scalable and could grow. And after a while, the businesses, primarily Lowe's, they really liked what they seen with where we were going and what we were doing. We were doing things much different than the industry had ever seen. You don't see a professional flooring installation company that's what they do. They have flooring installers going out. They wear the shirts. They have the badges, show their background check. They go over the project. They go through the checklist. So we implemented things of what I would expect a professional would put in, that experience, how it would feel. And over time, lumber liquidators, we grew with them. Lowe's, we had an opportunity to grow substantially with Lowe's, and it came to a point where we had 52 employees, 200 plus contractors out every day. Every flooring installer was a contractor. They were 1099, and on purpose. I tried the hourly guys. I tried the employee. It doesn't work. Performance based absolutely worked. So it was more of a keeping the margin decision. But 200 plus contractors out, 9 locations. We cranking out around 10.5 million per year, and Inc. 505,000 list 5 years in a row. So it was fast, it was fun, and the experience was real, and it was great. But there was a point in time where you put too many eggs in one bucket, and you're a transactional company, and things can happen. So Lowe's started plucking off management from Home Depot and putting them on retainer. And they had a 2-year non-compete. So we started seeing different relationships starting to break and unwind. And it was more of a Lowe's strategy to change the way that they were doing their business. And as Home Depot started coming over and infiltrating the relationships, we started seeing changes. And essentially, it came to a point where a much larger company than us, who had grown, who had hired Lowe's executives, they were coming in our territory. So it was either sell the territory to them or essentially get pushed out. So the decision, of course, was to sell, and not for a price of what anyone would be proud of, that they put their heart, effort, and energy into, and that was their baby for 8 years. So it was humbling, because that gave me a wake-up call that my light switch can be turned off just like that from somebody else. So essentially it was, there was a mind shift. Whatever I go into now, whatever I'm going to do, it's not going to be flooring because I'm not going to rebuild this company. I'm not going to go through all the BS again, the people, you get it to a certain level, it's cranking it out, it's great, but it is the grind and the hustle. Getting it there is the challenge, the struggle. What do I want to do next that people can't take away from me? My light switch can't get turned out. It's real estate. You own it, you see it, you touch it, you feel it, it's there. You can drive by it. The only one that can take it from you would be the bank, and that's if you fail on a mortgage. But if you have a tenant in there paying the mortgage, it's pretty damn resilient. It makes sense. So it's I had to figure out what was real estate investing. I knew nothing about real estate.
So
I knew as far as the investing, the professional piece,
quick
I knew that I
question.
needed to learn.
do you remember when you got the bug? Because we all did got the bug at some time, and we all
It
remember.
was 2019. 2019 was when major changes were happening, and I had to make a decision. What's next? Because there was an exit, and there is also what's next for me? Because at that time I was 36. So in my early late 20s, 28, 29 to the early 30s, I was building a $10.5 million company. I didn't care about real estate. I built a 15,000 square foot office and warehouse wrapped around a Lowe's account before I even owned my personal house. I didn't reflect back on personal at all. It was 100% business. Put everything into the business 7 days a week and build this thing. More money. It's all transactions.
Yeah.
The transactions stop, you're out of business, period. You just, and that's sales. It's sales anything.
Mhm.
Every day, like a hotel is out of business every day until their new customers come in and stay in the hotel room. That's just
Yes.
the way the industry works. Unfortunately, they fill it back up, and that's a transactional world. So it's my late 20s, early 30s. It was I didn't care about anything else. Wasn't looking for real estate. Didn't care. Obviously, we rented a 2-story larger house because I wasn't looking to expand the personal at that time. It wasn't building. I was cradling the baby.
Yeah, you're
so
grinding on the business, which is first of all, hats off, man. I mean, that's an amazing accomplishment to build a, $10+ million business in your 20s, essentially, right? And right into your early 30s. So hats off to you. But I do want to kind of point out something there real quick. Many people out there feel like, oh, my job is kind of like my safety net. And then those of us that realize, hey, when the rug gets pulled out, my job is no longer my safety net.
Mhm.
So we go into a business, but here you are running what is a really successful business, not a small business by any means. And you still had that rug pull moment that you had to like, oh man, I need to pivot.
Yes.
It was a glorified job is what it was. It was a job for Lowe's, third party. And I molded my entire company around it because when you're in small business, when you're dealing with multiple small other companies, your accounts receivable is constantly struggling because you can't chase the payments down hard enough. You're constantly chasing for payments. And when you have a corporate conglomerate that says, hey, look, we pay 72 hours net by the time you turn in the COC, certificate of completion, your cash flow now enables your own growth. You're not spending all this time chasing down money on net 15, net 30, net 45. So it was the workflows, the processes, the cash flow that really, I took the opportunity, I ran with it, and it was a huge mistake because it turned out to the company should have never grown past 30% of the biggest account, and it did.
Yeah, because you got the big whale basically supporting you. So once the big
Right.
whale decides to change, then everything goes with it.
Yeah, and there's a lot of companies out there that are in the same exact position. And essentially, if there's a relationship change or somebody doesn't like somebody, they're in jeopardy. And hopefully they make a change. Again, it's all experience. At this point, what have I made changes? Probably not. I would have done the same exact thing. Take the opportunity, ran with it. It enabled me to do a lot of other very cool things along the way as well. Just through growth. I mean, building a 15,000 square foot office. Now that's a huge asset on my books. We operate out of it. It's a badass office. It's all custom. I mean, it was concepted in 2016, built in 2017, moved in 2018. So we're doing real estate, but I didn't know anything about real estate. And here we are building it. And but it enabled us to do things. The cash flow, the growth. So there's no regrets. Am I better at decision making along those lines? Absolutely. Now that you see kind of how things unfold, but 2019 was my my eye-open awakening to real estate.
I'm getting a hint of diversification was a huge part there, right? And I kind of had a pretty similar experience back when I was running an IT business, put one way too large of a client and really put us in trouble. So I can completely understand. And you kind of bring that into your next life, your next business, so to speak. And then now in real estate, you make sure you do things a little bit different. You diversify. You go into multiple asset classes, multiple places, locations, things like that. So obviously from that experience, you learned that one of the really cool things that you were able to accomplish was that really cool office, right? That you put together that is still, like you said, a huge asset on your books. So, obviously you're a firm believer in real estate, but tell us, besides that one instance, what else leads you to want to buy real estate and to own real estate?
So 90%, wherever the statistic came from, 90% of all millionaires are built from real estate. Okay, so we all know that's out there, and that's what's enticing me. And then you see the guys rolling around in the Lambos and this and that, which we know is a part of the show. But at the same time, they have real estate. They invest in real estate. And they have it, and it's on the book. So how do you start connecting the dots of what is real estate? How do you know if it's an investment deal? What is cap? What is NOI? What is a DSCR? I didn't know any of these things, and because I never focused on any of these things. I just, everything's a game. You have to learn the language of the game in order to play the game. Once you start to play the game, you have to learn how to win. You cannot substitute anything for the amount of time that it's going to take. It's time. It takes time. Your brain has to absorb the information, understand the information, and understand how one thing can correlate with another thing. Cap rate directly correlates with the interest rate. You have to know these things when you're going in to buy a deal. If you're sub 5 cap and your interest rate is 6.5, you're at negative leverage. And brokers don't understand that. They're still trying to sell deals at a negative leverage. But you've got to be, when you're purchasing assets or playing the game in any industry, you've got to play to win. And I didn't purchase any real estate at all until I understood it. I didn't go out there and just try to figure it out and stumble through it. I mean, there was a massive learning curve. Massive. I didn't know. I've never flipped a house. I've never bought a house to make profit off it. So it's learning. And flipping a house was not my first piece of real estate. It was a 33-unit apartment complex, but it took me a long time to even get the balls, I'm going to say, out there to even execute on that, because you've got little man mentality on anything that you're scared of. So if you just do it, you're knowledgeable, and you've done all the numbers, all the math. It comes a point in time where you've got to take action. You have to just take action and do it. And what happens is what happens. But you can, as long as you put yourself in a bubble and protect yourself as much as possible. And then came the houses, because house flipping. Now we're not flipping anymore. We're owning them, because I've got project managers that I employ. I've got 3 project managers. I've got a staff of 9, and I've got 3 project managers. I've got accounting, bookkeeping, coordinators. Now we're doing property management, and that's I didn't never wanted to do property management. That just became a thing because I can't count on people. The people that I don't want to get into people and failure of them doing what they say they would do, but it comes a point in time you've got to add things to your business to execute on the business plan in order to get things done. Now I can push as hard as I want to push on a project because we fully control it. I'm not counting on Stan in front of me to give notices. Brittany, get the notices out there. We're renovating next month. You got to speed to the market on anything is key. You've got to have a sense of urgency. Entrepreneurs that we have here on the panel today, you're entrepreneurs. You have a built-in sense of urgency. You have to. And if you don't, someone else does, and they're going to run you over. That's just the hard truth of it. And it's just one or the other.
That's it. I love that. So let's unpack that a little bit, because first of all, you said something really, really cool. So not only did you skip all the beginner stuff, you just went right to a nice sized apartment building. You didn't even buy a 4-plex first. You're like, nah, that's small potatoes. Let's dig in a little bit. What had to what had to change in your mindset, and what were some of the lessons that you learned along the way that helped you feel comfortable with buying that 30 unit? You said it was 30 or
Exactly
33?
what happened on I bought I paid $1,600 for a Grant Cardone Saturday webinar. That is it. That's it. I told my wife after I listened to that webinar, I now know what I need to buy. It wasn't a house. A house is going to lose money. If you buy it one house to put in as a rental and you're going to buy it for cash flow, you're underwater day one. You're not going to cash flow. Prove me wrong. When that tenant moves out and you have to dump X amount into it, you're negative cash. Your cash flow is gone. If you buy it for appreciation and depreciation and the amortization, have it as an asset on the books, now you're talking. Now you're cooking with some oil, but you're not going to buy it for cash flow one house. Now, if you buy 33 houses in 4 buildings, now you've got a little bit of cream at the top that you can take home and put in the bank and spend on other things. You've got everything has a little bit of cream that you can take away after your debt, after you're paying your debt, your expenses, whatever payroll you have. You've got a little bit of cream at the top. That's yours to keep, and that's the accumulation of 33 houses, units under 4 roofs. It's but Grant Cardone was the mind shift on a Saturday, and after that. Sean Bradley, I went to school with him. I called him up. I knew he just got in with a brokerage. I said, Sean, this is what I'm looking for. I need you to find it for me. I gave him a list that I skipped trace. I said, call every one of these. This is every apartment complex in this area. Just keep calling until somebody answers. We're buying it. And sure as hell, I think it was like 2 or 3 weeks later, after we got our vivid vision in place, we knew exactly what we were looking for. It happened. The manifesting or whatever happened.
That's awesome. So you became clear. You got some coaching, right? You got a little bit of education. You had that mind shift, and I want to kind of dissect what you just said, because I think it's very important. You came up with your grand vision. You visualized it. You put it in writing. If I know you probably had that in writing somewhere, and you knew hey, this is what I'm gonna go after. This is my master plan. It's do or die. But this is what I'm going to go after. Am I correct? How important was it to actually write that goal down and to actually document it?
So I think we can all agree that a vessel or a ship does not leave harbor without a destination, or it just gets lost at sea, right? So I use Asana. It's just a platform that I've built out, and it's my life blueprint. What are my targets for 10 years, 5 years, 3 years, and 1 year? What are those targets? How am I going to get there, and what actions need to be taken? So we've got our 12-month target that goes to quarterly, that goes to monthly, that goes to weekly, and then your daily actions. What are you going to do to get to your targets? The path is there if you just spend the time to actually write. And it's miserable spending the time to actually map it out. It's horrible. But once you gain that clarity, it's incredible what happens. It's like the universe just puts things in front of you for it to line up. Spending the time to do it, that is when I gained that amount of clarity of what I truly wanted to leave every morning to go set out to do. That's when things started happening, making sense.
Yeah, I love that. So the old GPS adage, right? You got your plan, and that's like your GPS, just like the ships, the pilots. I mean, even if you're flying somewhere, you better believe that pilot has a GPS. He knows where he's going. He's got a game plan. He didn't just get in there and say, "Oh, I'm gonna fly this good old thing today. Where are we going?"
100%, absolutely.
That's pretty awesome, man. And so tell us, what do you think were some of the traits that you brought from your prior business experience that really helped you to shine and to grow so fast in real estate and to expand your portfolio as fast as it did?
Tremendous. Not even helping so much, but knowing now I'm different than every other operator out there because of the business behind the scenes of what I've learned and what I've picked up. Now our experience to the residents' experiences with us is wrapped around customer service. That's the whole mantra of building up a large platform of installations. Was how are you going to manage all these people and they're all going to be happy, and you're going to keep your customer service levels intact. So the experience of business, P&L, the numbers, knowing what makes sense, what doesn't, but learning a different game with real estate. Of course, you've got everything's different metrics, what correlates with what, but the business acumen of being an operator and developer on building a business before has absolutely propelled me to where I'm going now. And it's picking up steam because there's so many different components to real estate. Now I'm entering a totally different arena because I can purchase real estate on my own like I have been, or do I want to accelerate that and start bringing some other people around my campfire? I don't want them taking too much fire. You don't want your fire to be put out. You want them to get enough heat to stay warm, just enough people, but to where everyone's comfortable. Keep building the fire, keep putting wood on a fire, and that involves outside capital as well. And then more people, and then invite more people. Grow to where it's balanced, to where your demand is apartment units and your supply is your operations. If that becomes out of balance, somebody's going to get negatively impacted, whether it's the investors, the residents, the tenants, somebody's going to get negatively impacted. And fast growth through experience, it can go really good if you have the components in place. If you know you're going to be buying a 300-unit apartment complex, we're going to be pre-hiring people to make sure we're going to take that thing down, and it's going to be a very, very smooth operation. We're probably going to get rid of the existing property management because they're corrupted. They just throw money at issues. They don't know how to budget anything for an expense. We'll turn the electric off on units if they're vacant, and we'll renovate them with lights, with plug into the common area. The hallways have plugs. Turn the electric off. We saved $13,000 last year on a project from the prior owner's bills on the electric. That's like $168,000 added to the NOI on a 6 cap. It's incredible what adds up. $35 a unit, times that by 40 or 48 or 100, and compound that by the cap rate, and it starts making a little bit of sense. It's incredible. Just operations, having a solid team intact and a game plan and a business plan you can execute. That's what it's about, and just making sure you give as little disruption as possible.
I love it, man. You just brought up a good point. We'll touch on that vertically integrated piece that I think what you've built is quite amazing. But let's go ahead and define that for the audience that might be live or that might be watching on YouTube. How does you saving that $13,000 translates to an increase in that property value, basically equity, net worth in your pocket?
The real estate's valued on the net operating income. When you go into commercial real estate, we're not looking at comps. We're looking at reproduction costs, because that does matter. How much is going to cost to rebuild this thing? But we're looking at how much. Multifamily is a business. Okay, it is not just real. It is a business. It's a functioning business with income, expenses, in a bottom line. So how you got to protect that net operating income, because your value is based off it. How well is your business running? Your EBITDA is the same thing in your business. It's your X multiple is ran off. But this is NOI, it's real estate. So if you're in your cap rate, it's just a compounding cap rate. It's just like your multiple on your VDA. Things are a little different, of course, the acronyms, but $35 a month on a unit that adds up, say, just to $13,000. The amount of value that increases on the property is substantial. And a property manager would look at $35 as who cares? Well, it's compounding, though. It grows, and that problem grows. It's like, let's keep filling up this cup. This cup constantly eats money because it's falling out of the bottom. And it's just getting the different mindset. And you've got to have a carrot on the stick for every team member. They have to know that what's in it for me mentality. That's everything. And as long as you're compensating them well, not necessarily even on the base, but their performance, then it's a win for the company and a win for them.
Yep. Yeah, you're aligning yourself with them, and just like I know you align yourself with your investors, you got to align yourself with everybody on your team as well. Make sure that everybody's there for the same purpose and growth. And I had to do a little bit of a similar situation a few years ago. We had to start our own property management company and kind of bring things in house. Primarily, like you said, it was just a matter of control. It's not a profit center by any means, but it's a matter of being able to execute at the speed that I want to be able to execute, with the control that I want to be able to control and execute. So tell us, in your mind, because I've spoken to the group before, but what is give us some of the benefits, right, that you've noticed. Obviously, it's a lot more work. I get it. Your team is larger. There's a lot more moving parts that you have to manage as the head of this whole thing. But what are some of the benefits and some of that peace of mind that you've now gained after you've integrated that team?
It's knowing what we didn't know is the biggest piece. Your tenants, there's people will fail you at any opportunity they can get, and it's just the way it is. If they don't, property management do not have a line of interest with the ownership. They just don't. They're in business for the fees. Property management is paid, and they're in business for the fees that they charge your property. Period. If it's a new lease, they're charging X. If it's a lease renewal, they're charging X. If it's a maintenance request, they're charging X. 10%. They're charging everything above what the actual cost is. So there's the alignment of interest is not there, and they'll throw money at problems versus just fixing the problem, whether it's a maintenance issue or a vendor issue. But taking it over, we've seen, of course, a ton of feedback from residents. Which now our speed to a maintenance request is day one. Within 24 hours, we want that taken care of. We want to retain our tenants, our residents. We want to retain them. We don't want them moving out somewhere else, and now we've got to find a new resident to move in. That just costs money. If they're happy, they're going to stay. If the rent is within fair market value, then they're going to stay. There's a balance to everything. Taking over the property management has been a success for sure. It's been an experience. The experience keeps going. It's not something I wanted to get into. I wanted to focus on just buying real estate. But it comes a point in time where it's the betterment of us, our financials, our company, and really the trajectory. We've got total control of the assets at this point in time. Now we're charging a 7% management fee, where the other ones are charging 10% or 12%. We're charging our company back. We're not looking to stay in business. We want to cover our costs. We're not relying on property management to keep our doors open. There's so many ways to fill the cup up and keep the money in the cup versus just letting it just fall out of the bottom.
Sir, put a piece of gum, right? Just plug that hole.
Yeah, plug it up and get rid of the problem.
Yes, sir.
$1 you only have it one time. So if you let it fall out of the bottom, it's gone forever.
Yeah, I love it, man. That's a good way of putting it. So tell me more about that. When you decide to bring that property management in-house, how large was your portfolio, more or less? How would you recommend? Because we have some people in the audience that watch this show that maybe they're just getting started. They got one or two rentals. And I'm a firm believer in, especially when you're getting started, I always recommend to people, hey, hire that professional property manager. Don't try to do it yourself unless you have some education. You know, you had already gone through a series of educations, and you had gone through a series of steps to get yourself ready to bring that property manager and management in-house. Tell me, what do you think is that point that people should start to bring that management in, whether it's by size or by amount of work? How would you view that?
There's a number to everything. It's got to be a balance. How much are you charging per rent, per unit, per month? How many units do you have? Can it even afford professional property management? Because property management can put you put the property underground, and it will. Mm-hmm. The property we just bought in Dayton, 40 units. It was grossly mismanaged by the property management, and they ran it into the ground because of their fees. I did simple what I knew what the expenses should be, and this thing's a home run. We've had ownership for 3 weeks, but and I say that because if they put property management into their portfolio too early, your portfolio is going to fail. You've got to know your numbers. You've got to know how much you're bringing in. How much is that cream? You've got cream at the top. How much extra is there? How much are you willing to give away of that cream at the top? Because you're going to be giving it away. They're going to be keeping your books. They're going to be receiving the rents, and they're going to be paying you out once a month. So your cash flow goes away, and hopefully they don't fee it to death. And that happens. It's just the way it is. Who's in control of the money? Usually, they find little ways of keeping more of it. I hate to, and there's good property management companies out there. Don't get me wrong, there are. I think that it depends on you've got to vet the firm. You got to people get comfortable with where they're at, and if there's not proper oversight or accountability, things happen. Mm-hmm. It's just the way a lot of these places get corrupt just by nature of the industry and the way people. I deserve an extra $5, so I'm going to take $5 out of the laundry machine. Whatever the rationale is, but it happens. It's just the way it is. It's any industry.
Absolutely, man. So in your opinion, you advocate that to start off as your own property manager and then eventually outsource it. Is that what I understood?
When I bought the 33 units, it was kicking off enough cash flow for professional property management.
Gotcha.
That
Okay.
was out of the gates. I hired Reliant Property Management, ended up firing them late last year, which they lost a lot of good people. So, and then you're relying on them to do best practices for their employees so that they can keep good people too. You're not only extending yourself, you're extending your trust and yourself to other people's ability to even lead their employees. Because there are there's people in leadership positions that just truly don't know how to lead, or they're sloppy leaders. But in any case, that property was kicking off enough cash flow to provide professional property management to the residents. Now it's kicking off a lot more cash flow, a lot more. We're getting the property where it needs to be. We're retaining a lot more of the cash. We're filling the holes out on the bottom of the cup, just because we're using what we know best: simple tactics, common sense. Maintenance requests are taken care of, and you're not just throwing money away out on vendors that are just turning in invoices, and there's no approval system put in place. I've learned a ton too within the past years of what now I would have put in place then, because I got into a whole new industry. So I'm still there is a whole learning curve.
It's a whole nother learning industry, right?
It is. It's but you make your money on the buy. And this 33 units, I bought it for $1,450,000. I knew when he wanted 1.5, I said 1.4. We settled at 1.45, but I knew it was worth 1.9 already, just off of how much cash it was kicking off, because I educated myself on how to evaluate a piece of real estate before you buy it. So I had enough education there to make a sound decision. So I bought safe, I bought right. Now that thing's worth almost $3 million, just because the market is gentrifying. It's just an incredible purchase, and I've been fortunate enough to make those purchases that have come my way. But I also knew exactly what I was looking for, and I knew a little bit more than what they knew on valuation. Just I put the time in.
That's amazing.
You put the time in. I love it.
Exactly. Now bring it the thing where you put your time in. The question is, how do you spot a bad deal? What are the red flags? What's a deal that you go in and said, this is probably not for me?
So we're underwriting 5 to 10 deals a week. My team is, just because it's you underwrite 100 and hopefully one pencils out, hopefully. But I mean, you can tell a lot just by on the in-place NOI. If they're wanting to sell it for let's just say the whisper price is $20 million. Look at the NOI. Can it support a $20 million purchase? That's your first reference. You can do a back of napkin evaluation really quick. If it's close, we'll underwrite it all the way, and then we'll get feedback. We started interacting a ton with brokers, building relationships, and we'll give them feedback of why we're not buying based on a future value pro forma. We're not going to give away our sweat equity to the ownership right now. If they want that price, raise the rents, renovate the units, and then you'll get your price. But you're asking me to purchase based on a future value. Why? This is a business. Your donut shop is not. You're not charging enough as much as the donut shop down the road. Why is your business worth more? But that's the way it's going. A lot of syndicators, a lot of real estate investors are going to get hosed because they bought based on pro forma on a future value. And unfortunately, being in business in my background, my past, it kept me from entering into the FOMO arena, the fear of missing out.
Mm-hmm.
You don't make dumbass decisions. You're married to that deal for 3 to 5 years at least. I want to be married to them forever. But if you don't perform and it's a negative cash flow, that thing's gonna be miserable and put you under. One deal can put you under.
Absolutely. So it's the same thing that we always say: cash flow is king. If cash flow is not there, do not look for future appreciation or anything like that. If the numbers don't work from day one, just turn around and walk away. Don't fall in love with the property. Fall in love with the number. Move
on. Let someone else be fish, or let that thing sit on the market and just sit out there and rot. And it's just, you got to buy right. You make your money on the buy. And anyone who buys my properties, I will leave meat on the bone for them to purchase it appropriately, how it should be bought. I'll leave some units under renovated, under rented, just to say, hey, look, you can increase the value by doing X, we're going to sell it at in-place NOI. You've got a baked-in equity position there, and that's how it should be done. That's how it used to be done until these hedge funds started entering in and buying sub-3 caps and all this other nonsense.
Are you working locally, or are you going doing everything remotely? Everything is in your own market.
Right now I'm based out of Northern Kentucky, so it's Cincinnati, Northern Kentucky, Lexington, Louisville, Dayton, Columbus, Indianapolis. I'm within an hour and a half of where we want to be. Okay. We're in the Midwest. It's steady Betty. The cap rates. You don't have these erratic swings of population, jobs, and this and that. It's steady Betty. It has been proven for as far as I can remember. You can go back and look at the data and see that it's not Sun Belt. You're going to get a solid return if you buy it right. So I'm fortunate enough to be in a great part of the states where the buying is good if you can get it all right.
You said that a couple of times. But by the way, before I ask my next question, team, if you guys have any questions, please jump right in. We do Q&A at the end, but please drop any questions you have for Josh in the chat. He's dropping all kinds of gold nuggets here. So if anybody wants him to elaborate on a particular topic, please jump in, let us know. Josh, to that point about buying right, elaborate a little bit more on that, because, we've said it, but we say it our way. What's the importance in buying a piece of property right? When do you make your money in real estate?
Well, there's traps. There's all of these traps, bear traps, these claws that can come and get and rip your leg off if you fall into the trap. Which, by the way, the lender will not let them fall into the trap. So they're going to ask you to bring more equity to the table if you're foolish enough to buy at some of these prices. Which I don't think anyone on this call is, but there's traps out there that these brokers will put you in, and it's the betterment of course. Them to service their client, their customer, which is a selling team. It's if you're buying on a future value, meaning that you have to renovate in order to increase rents, and you're going to go cash flow positive if you increase the rents to pro forma, that's a bad buy. You can't do that. You can't buy the donut shop like that. You can't produce enough donuts to keep the lights on. It's just the way it's in any business. I say donut shop because that is a simple way of saying it is a business that you're buying. It's not real estate anymore. It's a business. It's just if you're wanting to just build up your single family portfolio and build your wealth position and not have it as an operating business, that's different. That's a totally different ballgame. I'm talking about buying real estate as a business that's going to kick off cash flow to give you a return on your money, and to give you depreciation, to give you amortization. And then if we're doing really good, we're going to blow that thing out of the water 3 to 5 years from now and give you a great return on the profits that we're going to split. That's the real estate I'm talking about. But along the way, you can can also buy houses, which isn't a bad play neither. If you buy the houses in the right place and keep that on your balance sheet, the more real estate you buy on your balance sheet, the more you can buy. It is incredible. The more you have, the more you can buy, the more you're approved of. The banks love real estate. They can stick their fangs in it, and it's real. It's not an intangible asset like a software. That can be gone tomorrow. It's real. And it compounds. The more you buy, the more you can buy.
It's that snowball effect, right? Like Mr. Warren Buffett says. And it gives you the ability to earn money, right? And not just on your money, but grow your net worth and get that cash flow while you sleep, while you vacation, while you hang out on the beach, right? Beautiful background, by the way, dude. That thing is...
We got that back, got here this morning. And that's why I emailed you earlier this week. So I didn't know what time it was going to be, but it worked out perfect. So the kids are down there with the wife. So it's working out.
That's amazing, man. What a privilege it is, right, to live the life that we get to live as real estate investors, where you get to work where you want, how you want, and when you want, and you get to just as long as you put the right places, the right things in place,
the right people in place,
and the right people in place, it continues to produce while you get to enjoy some family time, which we all need, right? At the end of the day. You said it best, right? For years it was just work, grind, but eventually we gotta spend, do what we came here to do, and is spend time with those that we love.
Yeah, but man, it's hustle. You got it. I know the way you work, Hector. Dude, you're 7 days a week like I am. It is it's not work, it's passion. If Hector, I know your mentality. Lewis, you guys are operators based on experience. That's where you take the risk out. Real estate's risky when you're the riskiest person in the room because you don't have the knowledge to buy right. That's when it becomes risky. That is the only time. And I want to make sure that real estate is not risky to the right people. And I want to make sure that that's clear. I'm saying what's out there for people to get caught up in, the bear traps, because they're out there. That hasn't happened to me, fortunately, because I've educated myself and I continue to I just listen to, I keep listening to books to gain knowledge, to get to the next level. And that's going to be infinite.
Oh, we're going to that question. Don't worry.
There's not enough time in the day to even, you got to keep learning and learning there's so many different facets. There's not enough time to just absorb it all. And that's where you got to buy time too. You got to get the right people around you that are the subject matter experts on what you don't have time to learn. Taxes, accounting, distributions. I've got an accounting firm behind our bookkeeping, behind my controller Nidal, that closes out the books every single month, that holds my accounting team accountable. With them having that proper oversight, it gives me the confidence that if we're going to create a security, the books are going to get audited every single month. Investors are going to have a clean set of books that they can bank on, that now I can rest my head and make sure that if the SEC comes and audits me, the books are clean. And I know you all do the same thing, but you've got to have the people in place to make sure that your operation is sound and buy the time of other professionals.
That's right, man. I love that. I love the way that you put that. You got to buy the right people, the right places, and buy your time back, right? And it is absolutely a passion. And sometimes when you're like us and you're a little too passionate, you can get lost in just that 7 day of work, and it doesn't really feel like work to me. That's right. Kind of why I don't see myself ever giving up on real estate or retiring. What is that? Retirement?
You're in the wrong field if you're screaming out the word retire. It's just we should talk about real estate all the rest of our life and be in the right groups. I think that's going to be something that we'll come up to, is seeing the younger generation when we're in a different capacity and helping them where they're at our stage right now, and helping them be brought up. Because mentorship is the key to everything. You've got to have guidance. You've got to have that lantern light on what lies ahead. That mentorship piece is huge in this business.
Absolutely. I think in anything in life, really, mentorship and having guidance and being able to learn and shorten your curve, right? I mean, we could all sit here and do it ourselves, but how long is it going to take you? 20, 30 years? Or, well,
Yeah, and you don't even do it right. You can do it wrong for 30 years.
You could do it wrong for 30 years. And you could pay the stupid tax a whole lot, or you could just, pay someone to educate you and grow a lot faster. And actually, you brought up a really good point, man. This is nowhere on the plan, but you have kids. I have some young kids, and I'm hoping to be able to kind of guide them in the right direction. Share some of the things that you do as a father, as a business owner, to kind of, get that kind of started real early for your kids.
So I did not grow up in the environment of real estate investing or anything along the lines of asset or liability. My kids know what an asset is and a liability. And I'll ask them, Dean, what is liability? Is your toy a liability or an asset? He'll say a liability. And I'll tell him, how do you turn it into an asset? He'll say rent it out or sell it. I want them to know the basics. A liability takes money out of their pocket, an asset puts money in their pocket. Just like if you just use that core principle, that will be a decision maker for every purchase decision you make. And those are the fundamental pieces of foundational that I want them to have and instill. They see what's happening around them, and they tell me, stop talking about apartments. Stop talking about this. You're buying another stupid house. This or that. They don't understand how blessed they are yet, but they're going to in the future.
How old are they?
Annabelle, she's 5, and then Dean's 9. So, which Annabelle is more of the she's the tougher nut, but that's just the way they're at their ages. But Dean, he likes what's going on. He's a champ. But instilling those core principles and them being in the room already. They're already in the room. Getting in the room is the hardest piece. I never even knew what the hell the room was. I just knew that I wanted to go out and grind it and make some money and live beyond my means if possible, which I still don't, and I don't plan on. Yeah, live within your means, but be able to live beyond your means if you choose to. But it's having that they're already in the room. I want to make sure that they're instilled with things that I had learned. It's all learning, and it'll last for years to come, generations.
That's amazing, man. And you know, I'm glad you answered that. Thank you for that. I'm definitely gonna start working on my 3-year-old so that he learns what a liability is.
And then when your friend comes over and you let your friends don't know what a liability is, and your 3-year-old is telling them, that's it gets fun. It does. It can.
Oh man, that is so awesome, dude. It's always good to ask other parents. I love asking questions like that to other entrepreneurs and other parents, because that's one of my biggest goals. I'm all about generational and passing down, not just money and assets. I want to pass down the right set of values to my kids. So like you said, you know, they don't have to pay someone to get in the room, or they don't have to learn this in their 30s like I did. You know, same thing. I didn't come from a background of business, of real estate, assets, liabilities, you know, credits and all this other stuff. This was all learned the hard way, right?
Mhm.
Getting beat up, getting punched in the face.
Humbled.
Yeah, fumble. So it's a beautiful thing that you're educating your kids and going in that direction. Definitely will be following up with you on that one, man. I want some more of those tips. Those are great.
100% for sure.
So let's take it back to the real estate thing here, right? So as you mentioned, managing your properties, bringing that peace in house, having that control, that's all very important. And you mentioned that you got your maintenance down to 24 hours, which is amazing. Congrats, man. Do you have your maintenance guys in-house? Are you outsourcing that? Tell us a little bit about that part.
Yeah, so we've got a ton of crews, just because we already had crews. We didn't have crews that were already in place, but we've recruited a lot of crews, so we already know how to recruit crews and properly vet them. But we do have one maintenance tech in-house. And then my project managers, they're overlooking the complexes as well. So they're overlooking the renovations plus maintenance issues. And if we've already got vendors on site, let's get the issues taken care of as well. And that's just becoming a norm and a practice to move forward with and make sure that the residents are taken care of. Ultimately, the happier that they are, the more they're willing to pay the rent on time and stay for longer.
Mm-hmm.
It's just like the donut shop, right? If you're nice when you sell them that good yummy donut, they're gonna come back.
Oh, 100% every time. And you can charge a little bit more for that yummy donut.
Yes. Oh man, this donut talk. I'm about to go back to Krispy Kreme after this. So I know you mentioned that Grant Cardone webinar or weekend that you did that was very important. What are some of the beliefs or the mind blocks that you know that we have? Like I mentioned, several people that are beginners that are, you know, own a few houses, own a couple. What is that mindset shift that you think you could recommend for them to try to go after, to try to grow to that next level, for them to be able to go after that 30-unit apartment complex or 100-unit apartment complex?
I would tell them to invest $30,000 into a mastermind group, a professional group, and save time. I would have done it 3 years ago. And now I still probably should, but that would have fast-tracked me so far ahead, because now you're learning from people that are actively doing it right now. You're getting the inside knowledge. You're buying yourself in the room, so you belong there. You're not an intruder, and you're actively able to work aside somebody else who's a player, who's doing it, who's doing a GP splits, looking over syndication docs, the PPMs, the structure of the waterfall. Just there's facets of this industry that you can't learn unless you're in the room. You're not going to pull it up on YouTube. It's not out there. Yeah. And it might be out there, but you're not going. When you do it in real life, YouTube is not going to let you know how to build that waterfall and invest next. that is really cool, man. I'm gonna Google it after this, like waterfall structure on YouTube. I want to check it out, see what I can find, see how deep they go.
Then you're gonna get
now you gotta need to pull it out there, or maybe I need to.
That is absolutely true. I do firmly believe in coaching. I've gotten plenty of it myself. Pretty high ticket stuff when you get to this game, but you guys are listening to the numbers that Josh is talking about. These are multi-million-dollar properties. This is not your standard single family investment. So it does cost a little bit more. The education is at a whole nother level. And I want to hit on something you said is make sure you're learning from the people that are out there actively doing it, right? There's 1,017 gurus out there. Find one that's still making the bulk of their money from real estate.
Yeah, and they're coaching to buy real estate. That is their transactional business, which is huge. I think it's great. That the coaching piece, you're giving back, plus you're able to deploy capital in real estate. That's if you find a coach like that, that's not just a guru. That's listening to what's being pumped out there and then trying to reteach it back. That's you want guys that are doing it, that have learned the lessons, that are able to shield you from the hard lessons learned.
Yeah, and then that goes back to there's been a lot of bad news out there right now on the market with some real bad deals that have been made. Some things that are unfortunate, just signs of the economy, but some things that we kind of knew were coming, or we should have known were coming, right? And so there's a lot of articles and negative news around syndication, around group investments that is out there right now.
Yeah, that one article is bogus.
Yeah,
the
right.
one. Well, it's bogus because you've got an inexperienced operator who should have never been able to do what he did to the degree that he did it. It's going to happen it's a business. And he messed up. He fumbled the entire business. Yeah. It's not real estate. And the real estate's still there. The real estate is still sitting there. That's the whole. It's the business didn't get wiped away. The real estate's still there. People still need to rent houses. It's in one of the hottest markets in the United States. You just had a jackass operator go out there and smear himself and smear the industry. And smart people will look through that. They will. It's not it's all about who the jockey on the horse.
Absolutely.
That's just it. I mean, how hard are you pushing your team to make damn sure that the units are leased? If that unit's not leased today, you can never get that money back. That guy just puts his head in sand. He does a capital call and then flees the scene. I mean, it's just a bad actor, totally bad actor. I know that, but that article was sent to me like 3 different times from 3 different people, and it has Appleway, and I'm like, shit, there's my last name out there. Nothing to do with this guy, but I tell them it's just the article's bogus. They're and really it's Main Street with Wall Street. Wall Street does not like the amount of capital going into these alternative assets. It's obviously being pulled from other places, and that's where it's being pulled from. So let's send the smear campaign out there. Let's get people thinking twice about investing in the next syndication. And that's exactly what it is. It's just a smear campaign.
Absolutely. And when I actually what I actually dug in and I read several versions of the article, and there was so many mistakes from the acquisition piece right down to how fast he grew, to the lack of manpower and of team, right? Some of these pieces that you're telling us that you've already put into place, that in itself was missing around his operation, and he went from rookie to 6,000 doors in no time at all. You didn't really have and then obviously we get it, we had the Fed coming in, but if anyone thought in 2021 that rates weren't going to be increased, they really should just pick up a history book, because it's there, right?
Well, and that goes back to balance. You've got a balance in everything. When you've got supply and demand, if that's out of balance, something's going to be negatively impacted. When you grow that fast, your operations, when you've got a bad operator to begin with, plus you're growing that fast, your operations just aren't stable at all. It's just it's out of balance. And that's what happens, right? When you're scaling, you've got to be able to foresee the future. You have to see the problems that lie ahead. That's the entrepreneur's duty and responsibility. See the future and make damn sure that you're doing the best to mitigate any possible risk. And if you can't do that, then you shouldn't be in a place of authority or to that caliber. You just can't, you're putting it now, you're the biggest liability in the room. That's what we had on that's what that whole deal is. It's a smear campaign.
So in case y'all are wondering, we're talking about a Wall Street Journal article that recently came out about a set of foreclosures in the multifamily world down in Texas. It was a total of 4 properties, if I'm correct, right, Josh? About 3,200 doors.
Yeah.
$230 million. It was a big epic fail from an operator that, just like Cindy says, make sure you're focused on active, successful operators, active, successful coaches, and that you're also, what I always tell people is make sure there's a little bit of common sense in the business plan when you're going to invest with someone. It is your job it is a passive investment, but as I always say, it is your job as an investor to do that initial vetting of the operator, but also look at the business plan. Don't just trust and take their word for it. I'm sure that there was many people that looked at the numbers, looked at the operation, and kind of thought to themselves, man, sounds a little too good to be true. And at that point, that's when you should kind of peel back a little bit and be a little conservative, because a lot of the mistakes and a lot of the things that were done could have been avoided by simply just taking a longer term mindset and simply just being better capitalized and more on the ball, like Josh is saying, with operations. It is a business. You have to man the donut shop. We go back to the donut shop.
Yeah, that's exactly, the owner's got to show up and make those donuts and get involved, be with the team and lead by example. And it would probably be even best if you could lead from behind, not necessarily even ahead. See where your team's going. Make sure you can guide them. Make sure everyone's on the same plan. You got to meet with them every morning. Let's set, all right, what are our weekly goals? What are our daily targets? What do we come here to do? And does this align with our monthly target? We go back to our goals. We have to be going somewhere. We always want to be aimlessly out at sea, and then some rogue wave comes and does what it's going to do. A bunch of boats. But meet with your team daily and go over operations, go over where we're at. What are we doing? What is property performance? We set targets and make sure that they align. And that's how you keep everything in line. You have to, communications, everything.
I love it, man. A rogue wave called Jerome Powell, Jay Payne.
Yeah, he's definitely doing a number, man. But he's also he's going to give us the ability to buy some killer deals.
Yeah, he's definitely out there, like you said, bringing things back into balance, right? Things got a little out of balance on the buy side. It was just free money out there. There was way too many logs in that fire. The fire got a little out of control. He is bringing it into, kind of hosing it down a little bit, bringing things into perspective. It will create insane deals for those smart operators that are out there just scoping out the scene, being patient and buying right, making sure that the buy box is hit on every deal, not just some of them.
Yeah, 100%.
I love it. Josh, you mentioned a couple times, that you read and that you always educate yourself. We pride ourselves on sharing those books with our audience. Share some of the books or some of the most recent education that you've taken that you think has been very helpful, even if it's not recent. You could have read it a million years ago, but it was life-changing for you. Give me a few of those.
If you haven't read Rich Dad Poor Dad, that is a pillar mind shift book, and it's a mind shift book. You have to, don't read it once, don't read it twice, read it 3 times. You're going to pick up in between the line information. You can't just go through this and then everyone gets distracted when they're either reading or listening. Your mind starts to just wander on. You're like, shit, I didn't even remember what the hell I heard. That happens. You're going to pick it up on the second go round. You're going to pick it up on the third go round. And then you're going to get a mind shift. And you're like, wow, I should have been investing in real estate. Why am I not? Now I need to. That's a mind shift book. Now you got to start calibrating. You got to start getting information and start figuring out, what is this? What is that? I listen to everything on Audible. Right now, my books are Reg D everything, securities laws. Not that I will ever put myself in a position like the attorneys, but I want to make sure that I'm competent enough to make decisions based on my competency. I don't ever. People will buffalo people, right? Unless you have that knowledge to where you know, and they know that you know that you're not a fool, you can protect yourself from people that are setting you up with those traps. So having competency on all these facets of real estate, there's not enough time, but you've got to have people that you trust. But books in your free time will at least help get you there. Think and Grow Rich is a pivotal book. Richest Man in Babylon. Geez, I could go through my my Audible list. I mean, it's all I do.
I love it, man. I'm an Audible guy too. It's it helps me to everything. Drive, sleep. I mean, I love just, you know, getting a good workout in, listening to a book.
That's a recommended list of books.
Yeah.
We have it on our website. Just pick them up, read them one by one. It's, you know, the mind shift will be there. It's amazing.
This one I've listened to like 4 times. It's called Turning Pro. Oh my God, man. There is there are things that book says. It's like, wow, you go from amateur to pro, and it says what amateurs are doing. This guy, I mean, he puts it out there. It's like, wow, it makes
amateur to pro.
Turning Pro, and that's the book name. But that's Audible. I would highly recommend getting that book. It's and it's only a 2-hour book, but it instills your mind with there it is, right there on the right. But if you're putting this information in your head, it keeps your axe sharp.
I love it. I'm definitely going to download that one tonight. I just put that on my list. And I'm sure you read Kim's new book, or you're reading it. I'm waiting for my copy to get here. I haven't gotten it. The how to legally raise private money.
Yeah, until it goes on Audible, I have nothing to do with it. I
broke down and ordered the paper copy, man. I don't think she's gonna go Audible. I've asked her a couple times, and she insists it has to be paper or digital. So
yeah,
I broke down and ordered the paper copy, and that's what I do when I fly. I read paper books.
Yeah, I'm with you. I'm just I'm a listening guy, man. I think too much when I'm reading, and I just don't comprehend anything that I read. I just think my brain goes into a totally different direction, like the another dimension, I guess. I don't know. But Audible's it does it. When she does break down and record it, though, I'm 100% in. I love ingesting information from just really anyone that's already there. I mean, just getting their story. It's huge.
Yeah, and you all know Kim. She's been on our show before. We've interviewed her. She is absolutely the queen of doing private money legally and group investments the legal way, which, you know, we keep talking about, because Josh and I want to be in this business 20, 30, 40 years from now, right? And Lewis as well. Yep. We don't plan on retiring. We plan on doing this, you know, the Warren Buffett style, 90 years old, still at the office. So we want to do things the right way. Josh, how would final questions over here? We got about 15 more minutes left on the show. What would you recommend someone do to start their real estate career? Never invested in real estate. They just heard this show and their mind is blown. They want to get into real estate.
Yeah. So they've already listened to Rich Dad Poor Dad. They know that they want to get into real estate. They don't know, they can't connect the dots yet. So I went and I never got my real estate license, but I went through the real estate course. And that's not the path I'm recommending going, but that's the path that I went to learn the language of real estate. But it didn't get me there. It wasn't I just didn't know where to go. Dead ends on YouTube, dead ends on books. It's very, very difficult to connect the dots. I would highly recommend joining your local RIA or meetup group and get in the room of other people that are, and I did that too, and I still do. And I didn't even understand when the speaker said, "Where are you all finding your deals at?" And one person said, "From Connected Investor." I didn't understand what they're even talking about. Like how are you you're finding deals? That's how bad I was with not bad. That's how much of a rookie beginner I was. But I got in a room, and you've got to take action. That's the biggest thing. The biggest piece to anything is just take action and propel yourself forward. If you're not, someone else is, and it is.
You're stuck in your spot.
Don't ever compare yourself to other people. That is one of the biggest things that I've been told. Don't ever compare yourself to other people. Mind your own business. And rule number two on the four rules of life is don't take anything personally. If you can conquer that, don't take anything personally from anyone. You will already have defeated the game. But don't compare yourself to others. That's extremely important. It'll frustrate you. You'll get there. Consistency is key. Keep showing up. Get in the right rooms. Ingest as much information as you can. Learn the language. Learn the nuances. Learn the code, and start just talking. Just talking to people. Get around the people that you want to become. Do, and the rest will come. It's
I love it. I love it. So feed the brain, proximity, take action.
That's it. Yeah.
I mean, I couldn't have summed it up any better, man. That's beautiful. Great words from Josh. You've seen him, you've heard him. He's done it. He literally reinvented himself a few years ago from one business to the next, and is hitting home runs, is doing major things in his life. Josh, what's next for you?
We're passive cash flow. That passive cash flow that demands nominal employees. And I say nominal because I don't want a ton of employee counts, and I want people that can be plugged in quickly. I don't want a skilled person propping up my business. I don't want a nurse keeping my doors open. I don't want somebody having to go to get a 4-year degree in order to. So self-storage and real estate multifamily give me the nominal overhead and employees, the type of employees that I'm looking to plug in. I've dealt with a lot of people, a lot of employees. They will let you down. They will fail. They will not show up. They will put you in bad positions, and then you got to figure it out. I want businesses that produce cash flow, that kick off enough cash flow to solve my problem today with cash, plus give me an investment, give me appreciation, give me the depreciation, amortization. I want the cash flow, kick off cash flow so I can pay my bills, and give me everything else as icing on the cake. Self-storage does that. We're building 460 units here in Northern Kentucky. I say here, I'm not in here yet, or right now. 21 and a half acres. The other thing with real estate is that if you start getting in these rooms, you're going to be, and you become known as a buyer, you can be handed some red lines if you think outside the box. But self-storage, multifamily, very heavy in. We're underwriting multifamily heavily every single week. If one pencils out, we're taking it down. We're going to take it down quick, and we're going to plug in management and get the thing where it needs to be.
Taking action. I love it. I mean, on self-storage, man, I love to partner with you on a self-storage.
100%.
So let's do it together.
There's nothing on the market in Northern Kentucky, and it's the hottest market in Kentucky. You've got Amazon just put in $1.4 billion of their infrastructure, and we got 21 and a half acres, a fraction or across the street from the airport. So it's incredible location, and property is already zoned for self-storage. It's the entire entitlement's already there, so it's a home run, and it's going to be on 5 acres, 3 acres expansion, possibly selling 13 and a half and putting everyone into an infinite return, 13 and a half acres, or we keep 13 and a half acres, make it RV boat truck parking, and there's that whole arena too, man. Whatever's just kicking off consistent, predictable cash flow.
Multiple streams of income, well diversified, well located, location, right?
I want to feel it, touch it, and I want it on my balance sheet. I want that thing to create wealth for me, and I want that thing to be able to produce more for others that they put in. It's got to be fruitful. I'm not wasting my time. I'm not wasting anyone else's time. If it doesn't make sense on the buy, we're not doing it. I want it to be fruitful. If we're going to deal with all the nonsense that comes up along the way, let that thing give us a massive return. Let it be fun. We don't have to take risky deals. It's buy right, and it makes some money along the way.
Do some homework up front, buy right, and you take the risk right out of it, right?
Yeah.
Josh, how can we get a hold of you? How can people get a hold of you? Obviously, there's an audience here live. There's an audience that's going to be watching this on YouTube. If you guys want to get a hold of Josh.
I'm all over Facebook, LinkedIn, Instagram. My website is Apple. Apple. It's APPELMAN, applemangroup.com. look me up. I'm there. I like to pump out the content because I want people to be aware of what we're doing. And I've always hated social media. I was never a social media guy. But in real estate, you have to put it out there. Let people know what you're doing. And if people get their feelings hurt, pump it out even harder. I don't know what else. Some people are like, "Why are you pumping it?" Because I have to. I have to let people know what I'm doing here.
It comes from the heart, man. Keep going. And by the way, if you must check out the podcast. It is absolutely great.
Yeah.
He has all kinds of heavy hitters on there. Just a bunch of real estate hustlers, right?
That's it, man. And and whether you're in real estate or in business, whatever you're in, you better be hustling. If you're not, someone else will, and they will take that away from you. That is hustler to me is much more than just real estate. It's a habit. It's in my genes. In any capacity, what I'm doing, where I'm at, it's a hustle. You have to hustle. If not, then it's wait and see and prove me wrong.
Wait and see who eats your lunch, right?
That's it, man. But guys, I truly appreciate you having me on. It's been a ton of fun, and I get stuck in the weeds like you all do. It's just great conversation. It's just what it is. It excites me. So.
Thank you so much for being here, man. Thank you for sharing your knowledge, yourself, your charisma with the group. We really appreciate it. I definitely learned a ton from you, as I do every time I hang out with you in the mastermind. Thank you, Josh. Really appreciate your time, man.
Yes, sir. Guys, thank you. We'll talk soon.
Thanks, man. Take care. So team, reach out to Josh, connect with him. He's a great guy.
Yep. Just let me know. I can Zoom. Just introductions, relationships are everything. There's OPM, other people's money, OPT, other people's time, and OPR, other people's relationships. And that goes for everybody in the room. Leverage other people's relationships, and it just everyone rises above. So, guys, appreciate it. You guys kick ass. Love the format, and we'll talk soon.
Thank you, my friend.
Thanks, man. Thank you so much.
Thanks.
Take care, bud.
Bye.
All right, Lou, you want to shut up? You want to go ahead and close it up?
Let's
Take us
close
to
it
the
up.
close out.
So here we go. Guys, if you have any questions, if you have any comments, you like Josh, you want to talk to him, you can reach out to him. You got questions for us. We're always looking for themes. We're always looking for things to talk about. So if you have any questions, you want us to talk about something specifically in real estate, reach out, realestate@reallifetraining.com. We're there. If not, we're at realLifeTraining.com/RE. We're always there. It's our page. We have our books. We have all our information. We have all the, when it's downloaded up, every one of the shows is there. Just come over, just reach out, just have a look. Anything you guys need, we're here. We just added, this is also fancy. We have the QR codes now. There's trade, phone numbers, emails, Twitters, Instagrams, all kinds of stuff for us.
Go back to the slideshow. I can't see the QR code, man. I gotta be able to scan it.
There it is. There it is.
We're getting techie, dude.
Yeah, we're getting techie. Oops, sorry. There you go. All right. So with this, please, if you guys are live, thank you for very much to being with us on a Friday afternoon, right before Memorial Day. That's amazing. We love you. If you guys are in YouTube, please like, subscribe, the bell, the thing. If you really subscribe to us, the system will let us know that you guys are liking it, and we can keep putting so much more stuff out for you. And with this, thank you so much, and see you on the next Friday.
Thanks, everyone. Happy Memorial Day. Have a fantastic weekend. And please remember, if you're on YouTube, go ahead and comment on that video. Give us some feedback. What do you want to know? If you're part of the community, shoot us an email, see us on Slack. Thanks, team. Love y'all.